Hey, what's up everyone? It's your favorite stock whisperer back at it again. You know I love talking about the big movers and shakers in the market, and today, we're diving into a stock that had a monster 2024 but is off to a rocky start in 2025. Yep, I'm talking about Axon, the company behind tasers, police body cams, and a whole lot more. So, the big question is now the time to buy the dip? Let's break it down. Alright, so Axon isn't just your average stun gun maker. Sure, they're best known for those taser devices you've seen law enforcement use, but this company's got layers. Think body cameras for cops, cameras for police cars, and even a fast-growing cloud software business, Axon Cloud, that helps manage digital evidence and streamline police work. But wait, there's more. In 2023, Axon scooped up Sky Hero, a company that makes drones and ground vehicles. And in 2024, they doubled down on the drone space by acquiring Dedrone, a leader in airspace security. With drones becoming a hot topic, remember those mysterious sightings over New Jersey last December? Axon's moves could prove to be genius. Here's what I love about Axon's strategy. All their products work together like a well-oiled machine. They sell a police department a taser or a body cam, and boom, they're pitching them cloud storage for the footage or AI tools to write police reports. It's like a flywheel that keeps gaining momentum, and customers are loving it. Axon reported a 123% net revenue retention rate in Q3 2024. Translation? Existing customers are spending more with Axon every year. Now let's address the elephant in the room, the stock. Axon crushed it in 2024 with a jaw-dropping 167% return, even earning a spot in the prestigious NASDAQ 100 index. But in 2025, the stock is already down nearly 20% from its 52-week high. Is this the end of the road for Axon? Not a chance, if you ask me. Here's why. Axon has been a long-term winner. Over the past 10 years, the stock is up an insane 2,063%. That's right. If you bought it a decade ago at $25, it's now trading at $565.85. Talk about life-changing returns. Sure, it might be harder for a company with a $43.8 billion market cap to replicate those kinds of gains, but Axon's history proves it knows how to deliver. And here's the kicker. Axon is just scratching the surface. Let's talk about tasers, which have already hit 35% market penetration in the US. Sounds impressive, right? Well, in Europe, it's only 3%. In Latin America, just 1%. And in Asia, a whopping 0%. That's a ton of untapped potential. The same goes for Axon's body cameras, which are at 14% penetration in the US, compared to just 2% internationally. And Axon Cloud? It's sitting at 4% penetration in the US, and literally 0% everywhere else. That's not just green space, it's an entire forest of opportunity. The company estimates its total addressable market at $77 billion, and with $1.94 billion in revenue over the past year, Axon's got plenty of room to grow. Now, here's something I find really interesting. Axon's business doesn't rely on consumers, so even if the economy takes a nosedive, it won't hurt them much. Law enforcement budgets tend to hold steady, or even increase, during tough times. Just look at what happened during the 2008 financial crisis. And with Donald Trump set to take office this month, Axon could be well positioned. Love him or hate him, Trump's platform was heavy on law and order themes, and he's a big supporter of law enforcement. That's good news for a company like Axon that serves police departments around the world. All right, now for the flip side. The biggest risk with Axon right now is its valuation. After last year's massive run, the stock is trading at 90x forward earnings and 17x forward sales. That's nosebleed territory, no doubt about it. If Axon stumbles in its execution or the market cools off, the stock could take another hit. That said, Axon's growth is still impressive. Revenue jumped 32% year over year last quarter, and with its suite of innovative products, the company is firing on all cylinders. If it keeps up this pace, Axon could easily grow into its lofty valuation over time. Wall Street seems to agree. Axon has a strong buy rating with 13 buy calls in the last 3 months. The average price target is $622.92, which implies a 9.3% upside from current levels. Not bad for a stock that's already delivered massive returns over the years. Here's my take. Axon's current dip looks like an opportunity. You've got a company with a proven track record, a massive growth runway, and a business model built for the long haul. Sure, the valuation is high, but with strong execution, Axon has the potential to justify it. If you're a long-term investor looking to add a resilient, innovative company to your portfolio, Axon is worth a close look. As they say, fortune favors the bold. And sometimes, buying the dip on a high-quality stock is exactly the kind of bold move that pays off. But here's the kicker. None of this works if you don't. Do your homework, manage your risks, and have a game plan. The markets don't wait for anyone, and neither should you. Want more insights like this? Subscribe, like our video, and ring that notification bell so you never miss an update. Want even more? Download our app and join our WhatsApp and Telegram groups. Links are in the bio. See you next time.